story, does the U.S. have a looming debt crisis to deal with? Well, first of all, household debt is up to $15.99 trillion. Not quite 16, right? But the good news there is that people actually are paying it back, as much debt as we have. Now, corporate debt's another issue which we could also talk about. Center for Freedom and Prosperity's Dan Mitchell joins us now. On the household side, Dan, let's start there. What would you say about that number? We had a guest earlier which is saying, you know, the consumer and American consumers in pretty good shape, able to pay back a lot of what they borrow, not in, you know, in such dire straits. But what do you make of that number, almost 16 trillion?
It sounds like a huge number, and it is a huge number, but here are two ratios that everyone needs to keep in mind. Don't just look at household debt, also look at household assets. And household assets have been increasing at the same time debt's increasing. So theoretically, there's not a problem. The other ratio is what is household income versus household debt servicing costs. So you might have a lot of interest on the debt, the money that you owe, but if you have enough income coming in, that's fine. So right now, with the economy strong, these numbers, these ratios are okay. But here's the thing we always have to worry about. What if there's, say, a bubble? What if we go into a recession?
Right.
What if our asset values fall? What if our household income falls? So all of a sudden that interest expense becomes big. Those are the things we have to be concerned about.
Yeah, we keep comparing or talking about NASDAQ 9,000 to the NASDAQ 5,000 days, or saying that NASDAQ is setting these records not seen since the 97 or 98. Back then, we didn't know that there were, or not a lot of people knew that the bubbles that were forming. Or you could say the same about 2006 until everything went haywire in 2008. Is there anything out there that does worry you? I mean, I brought up corporate debt as an example earlier, that some people are starting to be concerned about that.
There are two things that I personally am concerned about. Number one is sort of cyclical. All these artificially low interest rates from the Federal Reserve, other central banks around the world,
right,
pushing too much liquidity into the system. That concerns me, that's encouraged people to take on too much debt. The second thing is more structural, long run. Thanks to federal government policies, we subsidize borrowing and we penalize savings. And in the long run, that just, you know, we want those decisions to be made organically, undergirding genuine economic needs in the economy. We don't want Uncle Sam with a finger on the scale encouraging us to borrow too much and punishing us if we save.
Yeah, I don't see anything on the horizon that would necessarily change that dynamic, right? But it sounds like from what the way you look at things, at least short term, we are okay. I mean, that the economy is strong, the consumer is strong, that people are in a pretty good spot. It's just over time, these concerns, obviously, I mean, it's just a matter of when, and we don't know when that when will be, right?
Well, there's a little bit of good news.
Okay.
Trump's tax reform in 2017 slightly reduced the subsidy for borrowing by companies. So hopefully in the future there won't be as much corporate debt as there otherwise would be. But beyond that, yes, the economy right now is strong. The problem is this, say, 1984, where we have several years of good, strong growth, or is it 2007 when we're on the cusp of a bubble bursting or something like that? And frankly, economists like me, we're lousy forecasters. If I knew the answer to that, I'd be rich.
What do you look at? I mean, what signs early in next year would be a good sign to say that, hey, this can continue for a while, and versus if X, Y, or Z popped up, you start to be worried. What are you looking for in the first half of next year as an indicator, at least?
A lot of people focus on the stock market because that's supposed to be a reflection of the future profitability of companies. Well, yeah, but is it an indicator that any of us are very good at reading? Is something just a temporary blip or a genuine correction? Again, I don't pretend that I know the answers to that. So I tend to focus on government policy. And, I worry about things like the Federal Reserve keeping interest rates too low. I worry about Trump doing something silly on trade with, say, China or things like that. But beyond that, predicting the economy is a fool's game.
What about the election?
It is for me.
In terms of trying to price out who's the leading candidate on the Democratic side, might be the president's opponent. I mean, a month ago, for example, there seemed to be a lot of, whether it's economists or investors, coming on and saying, boy, we're starting to worry about an Elizabeth Warren candidacy and or presidency. Now that seems to have faded a little bit as her Her stock has faded a bit in the early states. But do you start to look at that, say, midway through the year and figure out what policies might result in, if Trump doesn't win?
Well, it's a great question because right now the macroeconomic political forecasting models, and for that matter, just market sentiment on the street, suggest people think Trump will win and therefore we'll have a continuation. And so people aren't as worried about, say, some of the really radical policies of Elizabeth Warren or Bernie Sanders. Or maybe they think those two don't have a chance of getting the Democratic nomination, and they're looking at Joe Biden, who, while on the left, is not considered to be a crazed, hardcore, anti-free enterprise politician. So, again, if you knew the answers to all these questions, if you look at political betting markets, you'd have a much better sense of this. But right now, all we can do is look and wonder: is there going to be some big political bombshell in 2020? Is Trump going to send out some sort of tweet that upends everything? And that could be both political and economic.
Anything
and
could
happen. There's no way of predicting that,
as we've learned in the news cycle. Forget 24 hours now; barely 24 minutes most days. So, Dan, thank you. Merry Christmas, Happy New Year. It's always good to see you throughout this year, and we'll see you next year again. Dan Mitchell.